Welcome to my channel. Time for Bitcoin. Let's take a closer look at what Michael Saylor thinks about the whole case with the collapse of the FTX exchange. I think his opinion on this topic is very interesting. In this interview, he also explains what mistakes have been made in the crypto world.
I think he got caught up in this entire crypto wave, and it was much bigger than him, and everything happened very, very fast. And in this particular case, it's still not even clear to him what happened. He'll probably register this or figure out what happened some number of years afterwards. So I think the humility of Satoshi is the observation that no one can carry the burden of that trust. Satoshi can't, no company, no board of directors, no government, no political process. At the point that you conclude that no one has the strength of character and wisdom and commitment to carry the burden of a billion people's money, then you realize that the solution is put the control of that into the hands of nature. Submit yourself to nature's laws and to the laws of mathematics, and then put it into the hands of a software that's not just a software program running on a machine, but a software protocol running on millions of machines. And so if you can create a fair, equitable, trustworthy, rational software protocol, if you can release it as a virus to millions of machines and hundreds of millions of people, you have a chance. You have an opportunity. It may work. And Bitcoin is the first example of a successful monetary protocol that was released. And in the first year or 2 or 3 years, it could have been smashed out of existence or could have failed. And now we're fortunate enough to actually see that it has grown to maturity and it is working, and it is the best choice in this crypto carnage. And for those who have clear vision and they can see through the sound and the fury and the chaos, they'll see that Satoshi was wiser than they realized. Satoshi said something very seminal at the very beginning of this entire movement. Yeah, the root cause of all these collapses is the trust that is required, and that trust has been betrayed over and over and over again. The FTX collapse isn't the first collapse of a bank. It won't be the last collapse of the bank. And until human beings develop the humility to realize that trusting the bank and trusting a fiat currency was the mistake in the first place, then they won't transcend and evolve beyond this situation. I think that Bitcoiners have had a very clear vision, and that's because they move forward in a principled fashion. And if you didn't buy the altcoins, if you didn't put your money in a crypto exchange, then you didn't fall short. You did the best you could do for yourself, for your family, for your friends, for your followers. There's been a never-ending campaign on behalf by Bitcoiners to convince people not to trust, run your own node, take responsibility for your own actions, hold your own keys, support an ethical, decentralized, fair, transparent protocol. And I would say that we can look at it as, well, we failed because we didn't convince everybody in the crypto world to adopt Bitcoin, but you can also look at it as we succeeded because we got the most number of people and the most amount of money to adopt Bitcoin. And so Bitcoin is still the dominant crypto asset network in terms of number of holders, in terms of value, and in terms of the amount of value stored on the chain. And so although we haven't convinced 100% of the people to agree with us, we've convinced the most of the people to agree with us. And this week is another educational lesson. As a newcomer to the space, I've only been in it for about 2.5 years, I observe that we are making great headway with mainstream investors and mainstream media. And we're also making great headway with the crypto bros. And all the crypto degens, everyone that said, I got to trade this altcoin, or I got to trade on that, or I need leverage, and they made fun of the Bitcoin maximalist and the ones that want to self-custody. And I think that now you won't find anybody in the crypto industry that would make fun of Bitcoin's principled approach.
Right.
And I think that if you go on CNBC and you look at the conversations are clearly, we can't really be trusting these wildcat, Wild West crypto casinos, and we need to be more responsible. The industry needs to grow up. I think that there are some ideas in the crypto ecosystem which are good ideas that have been poorly executed or executed in an immature fashion that has been counterproductive. So let's talk about the good ideas. The good idea is a digital commodity that is an asset without an issuer. Bitcoin is the greatest execution of the idea of a digital commodity because it is not just a commodity, it's a scarcity. It's an asset without an issuer that's absolutely capped. The second, and it has a role, right, as a long-term store of value or as a base layer for the digital economy or the entire world economy in the future. There's a second good idea. A digital currency, like the dollar, that can move on an Android phone or an iPhone at the speed of light between 8 billion people in order to allow cross-border payments, cross-border remittances, purchases, and the like, and to give an entitlement or access to the dollar to people in Argentina or Cuba or North Korea or Nigeria where they're without. And so there are probably 1 to 2 billion people in the world that have access to the dollar through the 20th century banking system. There are 6 billion people in the world that do not have access to the dollar. They are disenfranchised, they are unbanked, and they are suffering. So there has been a demand for that digital dollar. It manifested itself in the growth of Tether and Circle. That idea, right, looks a little bit degenerate to someone on the Upper East Side of New York City who's a trust fund baby with a JP Morgan account. But if you're living in Nigeria and the banks can't be trusted and the government devalued your currency and you're looking at starving to death, or the same in Venezuela, that dollar looks to you like a lifeline, and that is really critical for you. So the crypto industry, has spread that dollar and it's moved on crypto rails. It's moved on networks like Tron or Ethereum. Unfortunately, it hasn't moved on the Bitcoin Lightning Network. So the idea is a good idea, give billions of people the dollar, right? The execution is a bad execution. Let's basically use unregistered security and centralized crypto networks to give them the dollar. And now you leave someone in Lebanon with a choice. Do I trust Tether and Tron more than I trust the Lebanese government and my Lebanese bank? And of course, in their case, it's a stark choice. We know the government stole my money and currency was devalued and the bank frees my assets. So they're between a rock and a hard place, and they choose the crypto solution to getting the dollar. Now, there's a third good idea. A digital exchange. When you own Apple stock, the bank only lets you trade it when they're awake and they work 20% of the time, from 9:30 in the morning till 4 in the afternoon, Monday through Friday if there's no bank holiday. And if you want to trade Apple stock on Saturday afternoon, they just don't work Saturday. So a digital exchange works 168 hours a week, right? And that's nearly 5 times as much as banking hours. So the idea that you can get the bank to work for you all the time is a big idea. Also, the idea that I could have a digital exchange on my Android phone or my iPhone in my pocket as I travel through Central Africa is also an empowering idea. And finally, A fourth idea is just property rights. If you own Apple stock, a bunch of it, your bank is able to loan that Apple stock out and get a yield on it, but just not for you. You don't, right? So $1 million of assets sitting in a conventional bank is the bank's assets, and they get benefits from it, but you don't get benefits from it. So the 20th century conventional banking system is constructed to work part-time for its own benefit. And the idea of a digital exchange would be you ought to be able to hold your own assets, get the yield on your own assets, trade and transfer your own assets whenever you want, and do it at the speed of light and do it 1,000 times faster and quicker. The people want to own their rights. That's the ethical idea that came out of crypto. The execution of the idea was we're going to do it on a centralized, crypto token network, a Solana or an Ethereum or a something. And the problem is those are all unregistered securities, right? And so if you could take those ideas and you could put them on the Bitcoin network, on Lightning. Bitcoin is ethical because it's an asset without an issuer. Lightning is ethical because it is an open protocol, and the fees that run it are Satoshis. And Satoshis are, of course, ethical money. So if you had an open, fair protocol running on an ethical money, and then you gave tokens to creators, and you gave dollars to people in Africa that would otherwise starve, or they're locked out of the world economy without dollars. And if you gave them Bitcoin as the digital scarcity asset, and if you gave them access to these DeFi ideas and exchanges 24/7, 365, but it was ethical, right? Not only that's the first check, it's got to be ethical. The second check is it's got to be technically sound. Lightning's technically sound. You could support billions of people and do billions of transactions a day, quick and cheap, technically sound. And then third, it's got to be economically sound. You could create a digital commodity that had an inflation rate of 10% a year forever. It's not economically sound to have a continual inflation rate, like Dogecoin has continual inflation. So Bitcoin is economically sound because it's capped. Scarcity is technically sound because it's layered from the base layer, which is optimized for security, to the layer 2, which is optimized for performance and scalability, and enables layer 3 applications. And I think that as we look forward, what we'll say is, well, the first decade of crypto, they were trying to do all these good ideas, but they were doing them with unregistered securities and centralized banks and centralized exchange and those things, and with poor economic principles, right? And they collapsed they either collapsed because they're unethical and the regulators shut them down, or they collapsed because they're technically flawed, right? And they clog up and they're trying to do everything on the base layer, or they collapsed because they're economically unsound. The next generation of the digital economy, digital assets, people will pursue digital exchanges, digital currency, digital commodities, digital tokens, digital securities. They will pursue them, but in an ethically sound, technically sound, economically sound fashion.
Let me know in the comments what do you think about this interview. Thank you for staying until the end. Please like and subscribe if you appreciate my work.